Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from FEMASYS Inc. And let me tell you, this one has more twists than a reality TV show. Are they revolutionary or are they just really good at putting on a show? Let's find out. FEMASYS just released what's called an 8K filing. This is basically a quick update they send to the Securities and Exchange Commission, or SEC, whenever something important happens. Think of it like a company's version of a news flash. In this case, they're sharing their financial results for last year. Let's take a look. This report is all about how FEMASYS did in 2024. This is a look back at the whole year so we can see the big picture of where they're at financially. Were they making money or losing it? Were they moving in the right direction or going backward? These are the questions we'll answer. The reason for this filing is that FEMASYS released their financial results. Companies do this to keep investors informed about how their business is doing. It gives everyone a chance to see if the company is meeting its goals or if it's facing some challenges. It's about being transparent or showing all the details to the public. They put out a press release, which is a fancy way of saying they made an announcement to the world. This press release contains all the key information about their financial performance and some other updates about what they're working on. We're going to dig into that press release and see what it really tells us. Now, this report also includes a very important note. It says that the information they're sharing isn't officially filed in the same way as some other documents. It means it might not carry the same legal weight, and they're not necessarily taking full responsibility for every single detail. Think of it as a preliminary or early look rather than the final word. Let's dive into the financial statements. This is where we get the real numbers, not just the company's spin on things. Financial statements are the reports that show the company's financial performance and position. It's like reading a company's report card. Okay, so it looks like we're dealing with a press release here, so there aren't actual financial statements in this filing. That is a bit of a problem since we can't just look at numbers and instead we'll have to rely on what they say in this announcement. But let's proceed anyway and see what we can find. We'll have to make do with the information FEMASYS chose to highlight in their press release. This means we need to be extra careful about reading between the lines and understanding what they're not saying. It's like trying to solve a puzzle with only half the pieces. The company FEMASYS develops a technology for women's health. They are focused on making a new kind of permanent birth control. This is a competitive market with lots of other methods available, but their approach is to make something less invasive or something that requires less surgery. The press release talks about a lot of exciting developments, so it's time to put on our skeptical or unconvinced hats and see if the numbers back up the hype. Remember, companies often try to paint the prettiest picture possible, so it's our job to see if the foundation is solid. They discuss their FEMASYS program, which has completed enrollment. This program is the key product of the company, which is a birth control method. It is worth noting that there were some delays in this program previously. In addition to the enrollment of FEMASYS, the company is moving forward with a pivotal trial in 2025. This study, if successful, could be the make or break moment for the product's approval and commercial success. That means if it works, then they'll probably be able to sell the product, and if it doesn't, they're in trouble. The company is preparing for a regulatory submission for FEMASYS. The company is seeking approval from regulatory agencies, such as the FDA. The company mentions working with regulatory consultants, which means that they are paying for outside expertise on getting approval. Okay, here's where we get to the meat of the matter, their finances. For the year ended December 31, 2024, they reported a net loss of $28.9 million, more than they earned. Now, for a young, growing company that is investing heavily in research and development, this is not unusual. It's like investing in equipment to start a farm. The amount of cash the company has is $15 million at the end of last year. That means they can operate for about half a year at their current burn rate. It is something to watch as the company probably needs to raise money within the next year. The press release also mentions a decrease in research and development expenses. That's interesting. It could mean they're getting more efficient with their spending, or it could mean they're cutting back on innovation. Usually for a company like this metric should be increasing, so it might be a red flag. On the other hand, general and administrative expenses went up. That often means they're spending more on things like salaries, rent, and other overhead costs. You want to watch this, as this might mean the company is being wasteful. In summary, it looks like we're dealing with a company that's burning through cash quickly but has a promising technology. They're not profitable and are at risk of needing to raise cash. However, they are still in the product development phase, which means the numbers aren't the most important thing. The approval and success of FEMASYS will be the key indicator for this company, and that should come within the next few years. It's a high risk, high reward situation. The future is uncertain and success is not guaranteed. Now, let's zoom out and look at the bigger picture. FEMASYS is trying to disrupt the women's health market with a less invasive birth control option. That's a noble goal, but it's also a very difficult one. They're competing against established players with deep pockets and proven products. Their biggest strength is their innovative technology. If they can get FemBlock approved and successfully commercialized, they could capture a significant risks. The biggest risk is regulatory approval. The FDA is a tough customer and there's no guarantee they'll approve FemBlock. They need to prove that it's both safe and effective, and that can be a long and expensive process. Another risk is competition. Even if they get approved, they'll still need to compete against other birth control methods that are already on the market. They'll need to convince women and doctors that FemBlock is a better option. Overall, FEMASYS is a company with a lot of potential, but also a lot of challenges. They're trying to do something new and innovative, but they're also facing some significant headwinds. It's a high-risk, high-reward investment. The key to their success will be getting FemBlock approved, launching it effectively, and managing their cash flow. If they can do all those things, they could be a major player in the women's health market. Thanks for watching this episode of Corporate Decoder. If you enjoyed this deep dive into FEMASYS, please like and subscribe to the channel for more insightful analysis of the corporate world. Also, let me know in the comments what company you want me to investigate next.